Hey everyone, welcome back to Corporate Decoder. Today, W.L.F.C just filed a 3-for-1 stock split and a significant increase in authorized shares, and I am seeing a clear signal of the company's future growth plans. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is essentially making it easier to trade their stock and setting the stage for future expansion. Willis Lease Finance Corporation, a company we've talked about before, has just filed a Form 8. This is a report for important events that shareholders should know about right away. The key date here is the 17th of July 2026. This is when the main event we're discussing today actually took place. This filing is all about Willis Lease Finance Corporation, also known by its ticker symbol W.L.F.C. They are a player in the industrial sector, specifically in rental and leasing services for aircraft. Looking at them, they have a market cap of about $1.5 billion with shares trading around $191. That puts them in a pretty solid mid-cap space. The main item in this filing, item 5.03, is about changes to the company's official documents. This isn't just a minor tweak, it is a big move that affects how many shares the company can have. So, what did they do? Willis Lease Finance has completed a 3-for-1 forward stock split. This means if you owned one share before, you now own 3. It is like cutting a pizza into more slices. You have more pieces, but the overall pizza size stays the same. But this is more than just a split. They also massively increase the number of shares they are allowed to have. Their common stock shares authorized for issuance went from 20 million to 60 million, and preferred stock from 5 million to 15 million. This is a huge jump in the total number of shares the company can potentially issue in the future. This change officially became effective on the 17th of July 2026 after being filed with the state of Delaware. Filing an amendment to raise authorized shares is a pretty clear signal. Companies don't typically do this unless they have plans for that capital, whether it is for acquisitions, expanding operations, or raising more money through stock offerings down the line. It is like getting a bigger toolbox because, you'll need more tools for upcoming projects. The company's common stock, trading under the ticker WLFC on the Nasdaq Global Market, is the main focus here. A stock split, especially a forward split like this, is often done to make the stock price per share more accessible to a wider range of investors. When a stock price gets high, some individual investors might feel it is out of reach. Lowering the per share price can increase liquidity and trading volume, making it easier for more people to buy and sell. This exhibit is the actual legal document detailing the changes to their corporate structure. It is the official record of the stock split and the increased share authorization. The filing is signed off by Scott B. Flaherty, who holds the important title of Executive Vice President and Chief Financial Officer. This confirms that the company's leadership is behind this move. Now let's connect this to what else is happening at Willis Lease Finance. We've seen headlines about them approving this 3-4 on a split back in July, and also news about them signing a definitive agreement to acquire 12 aircraft and 13 engines earlier in July. This acquisition, combined with the stock split and the massive increase in authorized shares, strongly suggests they are preparing for significant growth. They are likely using the stock split to make their shares more attractive for potential future fundraising, possibly to help finance these kinds of acquisitions or other expansion strategies. Think about it, they are acquiring a substantial amount of assets, which requires capital by increasing their authorized shares. They are creating the flexibility to issue more stock later if needed. This could be to pay for parts of the acquisition to fund further growth initiatives, or even to bring in new strategic investors. It's a proactive step to ensure they have the financial tools ready for their growth ambitions. The fact that they had shareholder approval for this well in advance. As mentioned in the filing, shows a clear strategy being executed. Looking at institutional ownership, we see major players like M3F Dimensional Fund Advisors and BlackRock holding significant stakes. These institutions generally look for companies with strong growth potential and sound financial management. The steps Willis Lease Finance is taking, like ensuring liquidity through a stock split and preparing for potential capital raises, are often viewed positively by such investors. From a historical perspective, companies that undertake significant share authorization increases and forward stock splits, especially when combined with strategic asset acquisitions, are often signaling a period of aggressive expansion or a pivot towards new growth avenues. It's not uncommon to see companies in the leasing and rental space do this as they scale up their fleet or enter new markets. For example, when other leasing companies have embarked on major fleet expansions. They've often adjusted their capital structures to support these plays. What does this mean for a hypothetical investor? If you had, say, $1,000 invested in Willis Lease Finance before the split, you would now have 3 times as many shares, but each share would be worth about 1/3 of its previous price, keeping your total investment value the same initially. However, the increased authorized shares give the